Hi everyone, today let's talk about the PPI data, then we'll take a quick look at the Fed minutes, then we'll talk about Microsoft owing about $29 billion in back taxes, then we'll take a look at the economic calendars, then we'll look at the charts, then we'll take a look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So PPI came in hotter than expected, 0.5% in September. That was for the headline number. The estimate was 0.3. Core was at 0.3 as well. Forecast was 0.2. And final demand goods surged to 0.9%, while services increased 0.3%. Gas jumped 5.4%. We already talked about food. Energy more broadly rose 3.3%. Those are the big drivers for the headline number. Transportation costs 0.3%. Trade services 0.5%, and then deposit services at commercial banks surged 13.9%. Year-over-year basis 2.2%. The year-over-year headline number was 2.2% higher. That's a pretty substantial move higher. Definitely not what we want to see from the inflation data, and based on this, I would expect CPI to come in a little bit hotter as well. Moving over to the Fed minutes. And basically, they said there was a little bit of uncertainty if additional rate hikes were going to be needed. They were fairly balanced on whether they would need one more hike or if they're good at current levels. And markets rallied on this news, so there was a little bit of dovishness coming out of these Fed minutes. And we've been seeing that from some of the jawboning that we've seen from Fed officials, saying that they might just stay at this current level for a long time, or they might do one more hike, but either way, it seems like we're kind of turning the corner on the most recent series of rate hikes that we've seen, and markets took this as a little bit of a bullish sign. Moving over to the IRS, saying Microsoft owes $29 billion in back taxes. There's not a ton of information on this yet. This is pretty breaking news, but it is interesting and it's worth knowing. The actual number is $28.9 billion. Obviously, this is a massive amount of money. Microsoft is an even more massive company, but you can't just say $29 billion does not matter to this company. Obviously, there will be a lot of legal recourse. Microsoft disagrees with the proposal, and they might try to make some adjustments, and we'll see how this plays out in court. But it may weigh on the company at least a little bit. Moving over to the economic calendar, you can see those numbers, 0.5% versus 0.3 and 0.3% versus 0.2, all higher than expectations. 10-year note at 4.6, which is quite a bit lower than we've seen recently. That's good for equities. Looking at tomorrow, we still have core CPI numbers. That's going to be the big one at 8:30. Got another Fed member talking, and then we have the Fed balance sheet, which could be interesting, as well as the federal budget. Federal budget actually had a surplus. I don't remember exactly which month that was, but that was pretty surprising. And then this Fed balance sheet continues to get lower and lower, which in my opinion is part of what's driving yields so much higher. Moving over to earnings, we are getting into earnings now. So we had PepsiCo yesterday. They beat on the top and bottom line. We didn't have any earnings for today, but for tomorrow we do have Delta Airlines, Walgreens Boots, as well as Domino's Pizza. And don't forget, we really kick off earnings on Friday with the big banks as well as United Health. Moving over to Max Payne, we're up to 1.1 million options. Put wall at 430 continues to get bigger. Call wall up at 435. We're currently sitting at the top of the puts, which could be a pretty good limiter. 440 would be really at the top of the puts. So that would be just a little bit less than 1% higher for this week in terms of what I think is possible. But this is definitely showing some bullishness getting towards the top of the puts. And if we close up around that level, that should be a nice bullish indicator for next week as well. Moving over to the charts here on the hourly and the daily for the SPY, we had our first breakdown of this short-term trend. We'd been going basically straight up for 3 days in a row, and then today we broke through that in the pre-market, ended up dipping down to trend support, and then rallied from that level on the Fed minutes into the close, and that looked pretty good. And you can see that here on the daily chart. Came down, touched VWAP, touched the 21, touched that trend line, bullish momentum, bullish RSI, and this still looks clean up to the 55, currently sitting at 441.55. Next resistance for me, currently sitting at 438.98, which is basically 440. And zooming into this most recent structure, you can see that here. If we extend out that trend line and we do make it all the way to that level, that would coincide with the 445.50 number, which would be a nice little move. That would be about another 8 points higher from current levels, or about 2%, would be a nice move on the SPY and certainly possible. Doesn't mean necessarily that it's going to happen in a straight line. CPI numbers tomorrow will matter, but right now this looks pretty clean and still bullish in my opinion. Moving over to the NASDAQ, similar thesis, went sideways in the pre-market, dipped into the afternoon, and then rallied on the Fed minutes. Of course, this is going to also depend on CPI, but watching 372.85 for a potential breakout. And then above that, we have the downtrend line currently sitting right around 375. You can see that trend line here marking the tops from July, as well as the tops here in September. Overall, everything is still bullish, just like the SPY, but looking at this structure, this is going to be a clear area of resistance. Might overthrow it a little bit to test these previous highs. That could be all the way up to 378.77. Maybe grab some liquidity from that level. But you also have to play for the potential that this breaks through this kind of midpoint here. And if that does, then we should be looking for a retest of these previous highs up around that 390 area, which would be a massive move higher. Of course, if we get into this zone, we show some weakness and we pull back. Maybe we establish a higher low down around that 365, and then we could rally through. And ultimately, that would be a little bit better trade in my opinion. Moving over to the Russell and the Dow, similar thesis to everyone else, went kind of sideways. Russell tested the 55 EMA all the way down at 174.66. It was a pretty big move down based on the rally that we've seen here recently. Got below my level, which did make me a little bit concerned. Ended up rallying pretty aggressively, and we're up pretty significantly after hours as well. Finished the day around 175.58, and we're all the way up to 176.22. Looks clean. Dow basically went sideways, touched VWAP, but held the level at 335.91. Again, looking for the breakout on both of these. Want to see the IWM hold above that level and rally up, potentially looking to trend resistance around 178. Dow looking at the 144, EMA sitting at 341.93. My next level above that would be 343.23. Moving over to the equal weighted S&Ps, you can see we've been on a run here still. Could not get above 142.50. Tested above it once again, got very close to the 21 EMA on the daily chart. Still bullish momentum, but definitely showing some signs of slowing. I want to see this push up to the trend around 144, and then I would expect some kind of sell-off from there, and that's assuming that we get above the 21. This is a critical level going into the CPI report. Certainly could show some weakness from here, maybe pull back, establish a higher low, and then rally from there. Also possible, but critical level, definitely watching this going into tomorrow's session. Moving over to Tesla and Apple. Apple rallying once again here today, pretty good, 0.79%, right to that 55 EMA on the daily chart, almost to the penny. We're up a little bit after hours, just above that, but the daily close was about 10 cents below it. So critical level going into CPI. I suspect we might overthrow that to the trend line here. You can see marks the highs in August, as well as here in September, and then we might test it one more time here in October. That could be interesting. But currently watching this very interesting level at 55. Also have some horizontal resistance at 182.43, but it's so close here you would expect it to overthrow, similar to what we did here. Moving over to Tesla, this continues to struggle with that trend line. We had the trend marking that breakout here in July, again marking a breakout here in September, and then once again getting into this same zone. We're watching this kind of bullish structure, couldn't get above that highly traded zone at 268, right in this area, and now if we reject out of this structure and pull back, that could be interesting. This is still a higher low setup, but currently still a lower high as well, so we might be wedging up here on Tesla, which is not giving us any clear direction. Moving over to NVDA and Netflix. NVDA continues this massive run, big gap up, big rally, 2.2% on the day. Looks super clean up to these previous highs now. We're right at the highs from mid-July, and I would expect a retest up around that 500 area if this momentum continues. Certainly possible here. And then we have Netflix doing basically the opposite, breaking down massively. Broke the 21 EMA on the daily chart, and then from there it broke all the way down to the 200 SMA. Showed a little bit of bullish momentum, retested the 21, and then broke down massively, and now we are below the 200, below my level at 368.75. Next one for me is 348.76. And then below that, you can see we have the highs going back to April, right around that 348.50 area. And this does look very weak. You can see the last time we've been below the 200 is going all the way back to November of 22. And now we are below it again, and that could be a very bearish indicator here for Netflix. Moving over to staples and discretionary. Staples pulled back, but it's still a higher low here. Momentum pulling back as well. RSI below the 50 line. Could come down and test that SMA. Maybe we see a double bottom at that 66.27 level. Right now, we're still at a higher low. It does not look great coming off of this breakdown. We're below all the EMAs and SMAs once again, but you have to respect this rally that we had. Certainly could establish a higher low or a double bottom. Moving over to discretionaries. Basically went sideways, touched that level, touched the 9 EMA, and then rallied a little bit. We're up at 163.09, so we're still above that 162 level. Still watching for a push up into that same zone, 167.78-ish. Moving over to the transportation ETF, we have gotten a little pop out of it over the last 2 days. We had been chopping, we hadn't been participating in the rally, but now we've rallied up to the 200 SMA, the 21 EMA, as well as VWAP, similar to what we had here coming off of this level in the end of August, so not a massive move yet. But critical level here, if we see a breakout of the 200-day moving average, that could be quite bullish. We were watching this structure for a long time here between these two trend lines. We broke that recently, came down to a highly traded zone right at these tops from April and May. And right now that has held and we've seen a little bit of bullish momentum. If this follows through, that could give us another confirmation to the upside. A little bit of a late arriver on the rally, but it's good to see it over the last 2 days here. Moving over to the 50 and 200-day averages. Both of these still stuck at the same levels that we talked about yesterday. We had a wick right into this previous zone, 32.22. Got right to that level very close once again here today, except we closed on the highs, which is pretty bullish. I would look for a breakout tomorrow based on that candle close, at least a little bit of bullishness. 200 doing similar things through a wick to that 43.55 level that we tested yesterday. If this breaks higher here tomorrow, we could look for this previous consolidation up around 49.76. That would be quite clean. Momentum bullish on both. RSI still bullish. 200 SMA, you want to see it get across that 50 line. That would be quite bullish. But the 50-day average still doing it here, looking clean. Moving over to yields. 2-year yield, not doing much at all. 10-year yield, pretty decent breakdown. Down a little bit more than 2% on the day. We're right at the 21 EMA here on the daily chart. Momentum bearish. RSI not quite bearish yet, but critical level going into the CPI report. Makes sense. We did get the Fed minutes, which were a little bit dovish, so we saw that move down here today. Critical level, if this breaks down, we could look for that 55 EMA, which would give equities a little bit more bullishness, in my opinion. But if it holds and we rally back up to these previous highs, that could push equities lower, at least in the short term. Moving over to the dollar on the hourly and the daily. Got another bearish candle. Barely. It was a doji, 0.05% on the daily chart. Still bearish momentum. Still bullish RSI on the daily chart. And this is 6 days in a row here of downwards price action. And it does look like we're kind of holding in this 105.50 area. Could be interesting. If we get weak CPI data, maybe we see the dollar break through this and push lower down to that 55 EMA all the way around 104.30. That could be interesting. But if CPI comes in a little bit hot, which I suspect that it might, we could hold this level and then rally back up to 106.80 or so, which should spell some weakness for equities. Moving over to JNK and TLT. JNK slightly bullish on the day, 0.04%, testing VWAP once again. TLT on the other hand, massive jump on the day, 2.09%, basically the inverse of the 10-year yield, big gap up, big rally, up after hours, right into that VWAP and 21 EMA area, right around 89. Again, this is probably going to push through here at this point. Momentum has flipped to bullish for the first time in a while, and it is with some momentum coming off of this dip low. Volume coming through. Still want to see the RSI continue through as well, but this looks pretty clean here now on treasuries, and we haven't seen really very much for quite a while. This has been pretty terrible. We've seen a couple of bounces like this, but this seems to be a little bit different in my opinion. Moving over to the volatility indices, move index pulling back from that trend line down to the 9 EMA. Once again, if it breaks down from here, we could see yields going lower and bonds going higher. That could be interesting. VIX continues this breakdown. We talked about that yesterday, and we came right to the trend line that we talked about. We finished basically right on the money, 1610. Bearish momentum, bearish RSI. At this point, you would at least expect the 55 EMA to be tested at 1576. If that breaks down here, then we're looking all the way down to 1490 or this previous consolidation around 1350 could be interesting as well. I wouldn't expect all of that to happen in one day, but if we see a sell-off kind of like we saw here through the end of August, that could absolutely push us back into this previous zone, just like we saw, same price action, similar move down, and that could be pretty bullish for equities. Moving over to my accounts, I did pretty well on the day. I did play around with these options quite a bit on the IWM. I ended up rolling out to 176 for Monday, which was probably a little bit more aggressive than I wanted to be, but then we ended up rallying here in the after hours quite a bit. The IWM is all the way up around 176.20, so we've rallied about 50 cents on the IWM, which is substantial. That puts me in the money here for Monday already, and I have a $1.39 credit on that. Managed to make a few dollars here and there, and then looking at the Qs, similar thesis, rolled these calls out to Monday, 368 now for $5.40 credit. So my max profit for that position going into the Monday session. So I've got a couple of dollars of upside potential there. I also have some puts at 369 for 76 cents each. I'll pretty much continue to play these 1 and 0 day options on the put side as long as we continue to look bullish. Overall, everything still looks bullish, and that's my position going into tomorrow. Let me know down in the comment section what you think of the Fed minutes or the inflation data set to come out tomorrow. Is the Fed finally starting to come in a little bit dovish? Or will the CPI data come in hot tomorrow, and they will have to resume the hawkish tone? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading, and have a great day.